Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at D-Wave Quantum.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis of this fascinating company.
When we look at D-Wave Quantum, you just have to start with the sheer financial velocity they're showing.
Right.
This isn't just, incremental growth. It's explosive. In their Q3 2025 results, they reported revenue hitting $3.7 million.
And that number, it represents a clean 100% year-over-year growth. 100%.
And it wasn't just hitting the growth number, it's the beat. That figure sailed past consensus estimates by almost, 23.4%?
Yeah, a huge beat. Now, while that top-line story is magnificent, we do have to contextualize the bottom line a little.
Okay.
They are currently free cash flow negative, so they are still burning money.
Okay.
And the Q3 EPS was negative 5 cents.
That's the classic high-growth tech trade-off, isn't it?
Exactly.
They're in pure investment mode, just pouring resources into R&D and scaling up. But here's the number that makes all that R&D spending seem worth it. Their gross margin sits at 82.8%.
That margin is just spectacular. It signals the potential profitability of this quantum as a service model once they really hit scale.
Right, it tells you the marginal cost of providing the service is actually very low.
It is. After that initial high cost of building the hardware, it's extremely low. It validates their pricing power and the value of their tech.
And this strength isn't just theoretical. It's really anchored in their balance sheet.
The liquidity is exceptional.
Yeah, we're talking about a company with essentially zero financial distress. Their debt-to-equity ratio is almost nothing, like 0.05.
And the current ratio is the number that just absolutely jumps off the page at you. 54.68.
54.
For context, a healthy company usually has a current ratio of maybe 2.0. So 54.68 means they have a massive cash runway, over $836 million in their war chest.
Okay, but while that cash hoard eliminates existential risk, it does raise a small analytical flag, doesn't it?
How so?
A ratio that high suggests, incredible security, but maybe also a bit of inefficiency. Is that $836 million waiting to be deployed, or is it just sitting idle?
That's a fair point. But when you're building foundational tech for the next century, having that capital lets you withstand market cycles and outspend competitors without constantly hitting the markets.
Good point.
And they just reinforced this with a $175 million equity offering. It just proves they have access to capital whenever they need it. They don't get distracted by survival.
And the market is definitely expecting this to translate into more scale. Analyst forecasts project FY 2025 revenue to hit $25.04 million, which is nearly tripling last year's figure.
And FY 2026 consensus is already targeting almost $40 million. We are clearly watching a company move from the lab to the enterprise fast.
So to understand how they do that, we need to talk about their competitive moat, which is pretty significant.
It is. D-Wave Quantum holds a very unique position. They are the only pure-play, publicly traded quantum computing solutions provider on the New York Stock Exchange.
That visibility alone is a huge advantage for institutional access.
For sure. But the real distinction is in their technology. When most people think of quantum computing, they think of the gate-based universal computers that giants like IBM and Google are working on.
Right.
D-Wave uses a different approach. Annealing quantum computers.
And that distinction is critical for investors to understand. Gate-based machines are trying to be universal, capable of any calculation.
But they're highly error-prone and still years away from robust, large-scale commercial use. D-Wave's annealing tech, on the other hand, is designed specifically for optimization problems.
So think of it this way. Annealing is not trying to replace your laptop. It's trying to solve things like supply chain logistics, drug discovery, or financial portfolio optimization.
And do it faster and better than any classical supercomputer ever could.
Exactly. It's a specialized tool for these massive industrial-scale headaches.
And because it's specialized, D-Wave has been able to commercialize it now through their quantum-as-a-service model. They're selling solutions today, not just promises for a decade from now.
And we are seeing that translate into real-world business adoption. They recently finalized a strategic agreement with BASF.
Yeah, the global chemicals leader. That is a huge proof point. A Fortune 500 company putting their industrial optimization needs on the D-Wave platform.
And their wins extend into highly regulated sectors, too. They've advanced their partnership with the Davidson Technologies.
And crucially, they've been added to key government procurement platforms, like the US DoD's trade wins.
That inclusion is monumental. It just opens the door to immense multi-billion-dollar defense contracts.
The overall value proposition seems really clear. High customer stickiness because the solution provides a demonstrated ROI.
Yeah, customers in telecom and pharma have publicly confirmed it. They are solving expensive problems right now.
So let's move to the market technicals, because
Yes.
the stock price reflects every bit of that excitement.
Oh, it does. Over the past year, the shares are up an almost unbelievable 1,540%.
Just massively outpacing the general tech indices, the broader market, everything.
That kind of run doesn't happen without a fundamental shift in perception. And technically, the chart confirms a very solid bullish breakout. We're seeing strong support holding around that $23 level.
Right, and while it recently tagged a high of $46.75, the momentum indicators suggest this rally isn't quite over yet.
The shares are trading consistently above the 50-day and 200-day simple moving averages. That's a classic bullish setup.
And importantly, the RSI, the Relative Strength Index, is sitting comfortably in that 55 to 70 band. It hasn't flashed an overbought signal that usually comes before a sharp correction.
The analyst community is clearly signaling confidence too. We're seeing overwhelmingly bullish sentiment. 13 analysts have a moderate buy or a buy on it.
The average price target is $28.67. But critically, we're seeing top-tier firms putting targets as high as $40. They see the commercial scaling reflected in the price.
Okay, so here's where we look for the near-term catalysts.
Right, the market is waiting for these defined dates that'll likely determine the next leg of this rally.
The most important of those have to be the upcoming earnings releases. Q4 2025 is scheduled for December 16th.
And then Q3 2026 follows on February 7th. Those are the ultimate acid tests. Can they sustain that staggering revenue momentum?
Beyond the scheduled financials, there are some big market mechanics at play. On December 20th, we have a major quantum ETF rebalancing event.
And since D-Wave is the only pure-play public option,
A massive fund inflow from that rebalancing could inject some serious, unexpected volume and volatility.
then heading into the new year, on January 15th, we'll get the institutional position disclosures. We'll find out if hedge funds kept buying shares during this run-up.
And we also need to watch for the 2025 Holiday Enterprise Customer Report, which is expected around January 6th.
Right, that report gives an early look into adoption trends and budget allocations for the coming year. It's a key forward-looking indicator.
And of course, in a sector this hot, you have to consider the speculative catalysts. Rumors.
Always. The potential for a massive M&A event with a big tech or aerospace incumbent just buying them outright is definitely on the table.
Or maybe they land one of those huge multi-million-dollar enterprise licensing deals.
Another major spike could come from being selected for a national quantum cloud infrastructure pilot, especially as governments ramp up strategic computing investment.
Okay, let's unpack the flip side. Because this rapid growth comes with significant counter risks, especially around insider activity.
Yes. While big funds are buying, the insider transactions are sending a very, very mixed signal.
We've seen notable insider selling over the last 3 months, which always, warrants a close look. Form 144 notices were filed for planned sales of up to 1.6 million shares by executives.
And to put a number on the profit potential here, the CEO, Alan Baratz, exercised options at a price of 91 cents.
91 cents?
And then sold those shares on the open market at an average of $28.87. That's a phenomenal return.
We've also seen large sales from the CFO and chief legal officer, often described as necessary for, tax obligations or personal liquidity.
And while the company can explain these sales as routine, the sheer volume dictates caution. When the people closest to the operation are locking in multi-million-dollar profits, it introduces some skepticism.
And that brings us to the key structural risks. First, their reliance on equity financing.
Right. Because they're still reporting net losses, they rely on capital raises to fund expansion. That means the constant threat of short-term shareholder dilution is always there.
And the second, and maybe more existential long-term risk, is competition. We talked about Google, IBM, AWS.
Right. They're not focused on annealing. They're focused on gate-based quantum. These incumbents are investing billions in alternative architectures.
So if one of them has a major breakthrough in error correction for universal quantum computing,
it could potentially diminish the long-term utility of D-Wave's specialized technology. They are currently in a profitable niche, but the landscape is defined by giants aiming to win the whole market.
Which makes D-Wave a high beta stock. It magnifies volatility.
That high beta is quantified at 1.53. So if the market drops by 1%, D-Wave statistically tends to drop by 1.53%. It really magnifies downside risk.
However, that huge cash position, that $836 million, it acts as a critical buffer.
It provides resilience against existential risk, even if the stock price itself is highly volatile.
So what does this all mean when we put it all together, the opportunity versus the risk profile?
Well, if we synthesize this, the overall picture remains extremely bullish. I'd rate it a 9 out of 10.
A 9.
The undeniable strengths are the explosive growth, the scalable high gross margins, and that robust liquidity. Those fundamentals make the company resilient.
And when you pair that with the concrete near-term catalysts, those earnings releases, the ETF rebalancing, it looks poised for volatility, but upside volatility.
Absolutely. D-Wave Quantum is a prime candidate for both short-term traders looking to capture that catalyst-driven movement and for long-term investors aiming to capture the secular adoption of quantum.
The only requirement is you have to be comfortable with that high beta, and the insider sales definitely require monitoring.
Ultimately, you have to decide if the demonstrable commercial scale of specialized quantum technology today is a better bet than the theoretical potential of universal quantum computing tomorrow.